Hello, everyone, and welcome to Geopolitical Trends, where truth matters. Something major just happened, and it could shift the balance of economic power in Southeast Asia for years to come. Recently, Chinese Premier Li Qiang landed in Jakarta, where he met with Indonesian President Prabowo Subianto. The message was clear: China and Indonesia are doubling down on their partnership. In an era defined by geopolitical uncertainty, protectionist tariffs, and an unraveling of long-standing trade systems, these two nations, China and Indonesia, are choosing deeper integration. But this isn't just another diplomatic handshake. What happened during this visit could have major implications, not just for Southeast Asia, but for the U.S China rivalry, global trade and finance, and of course, the emerging of a multipolar world order. Let's start with what was announced. China and Indonesia are strengthening investment ties through their sovereign wealth funds. China's Investment Corporation, CIC, and Indonesia Investment Authority, INA. These funds agreed to expand joint investments, especially in strategic sectors like infrastructure, green energy, and the digital economy. And they are not playing small. CIC alone manages over $1.3 trillion in assets. And this expanded partnership is expected to unlock billions in new capital to accelerate Indonesia's development. But this agreement didn't emerge in a vacuum. It emerges as the U.S. China trade tensions are flaring up again, with new rounds of tariffs and escalating rhetoric. During the Jakarta visit, the Chinese premier warned explicitly against unilateralism and protectionism, signaling Beijing's frustration with Washington's increasingly confrontational trade stance. So what does China do in response? You may wonder. It deepens ties with countries that can serve as strategic and economic partners. And Indonesia fits that role perfectly. But here is why. First, China is already Indonesia's largest trading partner. In 2024, trade between the two countries topped $147.8 billion, growing by over 6% from the previous year. China is also one of the biggest sources of foreign direct investments into Indonesia, investing more than $66 billion to date. And while much of that investment has traditionally focused on mineral processing and infrastructure, this new era is about diversification. We are talking joint ventures in AI, artificial intelligence, cloud services, EV battery productions, maritime developments, and more. In short, this is not just about trade. It's about strategic integration. Second, the relationship is being institutionalized. By formalizing collaboration between sovereign wealth funds, China and Indonesia are essentially locking in a long-term alignment. This makes it harder for external pressures, especially from the West, to disrupt their economic trajectory. This isn't just an MOU or a trade memo. This is billions in capital being allocated towards shared national goals. And the symbolism matters, because the symbolism is this. While the United States is busy threatening tariffs on allies like the European Union, China is sitting down at the table with developing nations and saying, and I quote, "Let's build something together," end of quote. Third, this is a response to the changing world order. As the U.S. leans further into protectionism, threatening 50% tariffs on the EU goods and pressure companies like Apple to shift production back to the United States, China is pivoting towards regional resilience. And Indonesia, with its large market, rich resources, and non-aligned foreign policy, is an ideal partner. They are not choosing sides. They are choosing opportunities. Premier Li's comment in Jakarta makes it clear. China wants to lead a regional bloc that resists economic coercion and embraces mutual development. Indonesia is not just a participant. It's becoming a pillar. Let's talk about strategy. China's investments in Indonesia are not simply economics. They are geopolitical tools. Take the Jakarta-Bandung high-speed rail, the first in Southeast Asia, built with the Chinese capital and expertise. It's a literal symbol of China's reach into the region. Now, pair that with investments in sovereign funds, critical infrastructure, 5G, and supply chains. And it's clear China is building long-term soft power, not just through domination, but through partnerships. It's the Belt and Road version 2, if I may use the term. Less grand rhetoric, more targeted influence. So what should we be paying attention to? 1. Will the U.S. respond with more protectionism or strategic alternative? 2. Will Indonesia continue playing both sides or begin leaning more towards China in global forums like ASEAN and BRICS Plus? And 3. And will other countries in the region like Vietnam, Malaysia, the Philippines follow suit with similar fund-to-fund partnerships? Because, make no mistake, this isn't just a China-Indonesia story. It's a template. And if it works, it will be replicated across Africa, Latin America, and Southeast Asia. Here's the big picture. The global economy is fragmenting, and the old U.S.-led trade order is no longer a given. As America tightens its grip, China is opening its arms to nations that want growth without conditions. And as sovereign wealth capital begins to flow across borders in new ways, we may be witnessing the emergence of a parallel economic system, not built around the dollar, but built around mutual investments and multipolar cooperation. Indonesia's role in this isn't passive, it's strategic. And if this partnership deepens, it could mark a real shift in who leads the next chapter of globalization. As China tightens its grip on Southeast Asia through infrastructure, sovereign wealth, and soft power, one thing becomes clear. The global economic map is being redrawn in real time. But while nations repossession and new alliances form, investors around the world are already reacting to what all this really means: a future filled with uncertainty, fragmentation, and shifting power centers. And in moments like this, when the world feels like it's on the edge of something big, history tells us where capital goes. Go. While world leaders argue over trade routes and financial systems, smart capital is rushing towards something far older and far more reliable. Gold has experienced a remarkable surge in 2025, significantly outperforming major equity indexes. The Van Eck Gold Miners ETF, GDX, has soared by 49.1% year to date, while its counterpart, the Van Eck Junior Gold Miner ETF GDXJ has achieved an impressive 51.27% increase. The SPDR Gold Shares ETF GLD, which tracks the price of gold bullion, has risen by about 27.93%. And the iShares Silver Trust SLV has gained 13%. In stark contrast, the NASDAQ 100 index has experienced a slight decline of 0.46% year to date. This divergence highlights a significant shift in investor sentiment, with many turning to precious metals as a hedge against economic uncertainty and market volatility. The robust performance of gold and silver assets underscores their enduring appeal as a safe haven investments in turbulent times. This leads me to talk about today's show sponsor, Goldmine Inc., NASDAQ stock ticker USGO. On January 20th of this year, President Donald Trump signed an executive order called Unleashing Alaska's Extraordinary Resource Potential. It reads, and I quote, "The state of Alaska holds an abundant and largely untapped supply of natural resources, including, among others, energy, minerals, timber, and seafood." President Donald Trump indicated he wants to develop Alaska's resources to the fullest extent possible. The executive order directs U.S. policy makers to fully avail itself of Alaska's vast lands and resources for the benefit of the nation. As you can see in the graph, gold stocks have a tremendous gap to close compared with gold's spot price, which has soared. I am bullish on the gold stocks sector right now. Bank of America's chief investment officer is predicting a weaker dollar cycle, as you can see in the chart below. With no debt and approximately $3.9 million in cash and cash equivalents as of December 31st, 2024, and a project in Alaska, the sponsor of today's video is U.S. Gold Mining, trading on a NASDAQ stock exchange with the ticker symbol USGO. The stock is trading as of early May, some 40% below its all-time high. At its April 2023 IPO, gold was worth $1,930 an ounce. Now, gold is trading at an all-time high. Yet, USGO's share price is still around its IPO price, down 40% from its all-time high. Their flagship Whistler gold, copper, silver project includes 3 gold deposits with combined estimated mineral resources of 6.5 million ounces of gold, equivalent in the indicated category, plus an additional 4.2 million gold equivalent ounces in the inferred category. One shareholder owns 80% of the company, so this is a very unique scenario. The most critical developments, and in my personal opinion, and a potential value driver, comes from the Trump administration's attitude towards Alaska. So this is Mike Dunleavy, the governor of Alaska with President Trump, and below with CEO of U.S. Gold Mining Inc. and on their Whistler projects in Alaska. Tim Smith, the CEO, came to the U.S. gold mining from Newmont, a 100-year-old gold producer, one of the largest gold mining companies in the world. He also worked for Caminac, which discovered the coffee deposits in the Yukon and advanced the resource until Gold Corp acquired it for 520 million Canadian dollar. One of the most significant buyouts of the past decade. The CEO of the U.S. Gold Mining Inc. was part of the team that sold the coffee gold deposits, which was owned by Caminac. He sold it to Gold Corp for 520 million Canadian dollar in 2016. And while we are talking about different projects where outcomes could be different, this is the reason he was recruited to become CEO of USGO, so that he can utilize his skill set and work towards similar goals for U.S. gold mining. With gold recently at $3,400 an ounce, the best performing major assets class in 2025 so far, and with Trump's massive executive order for the benefit of the state of Alaska, with one major corporate shareholders owning 80% of USGO stock, and with a CEO that is a fit for this role. Do your own homework on USGO trading on the NASDAQ. Remember, there are always risks in investments, and there are no guarantees of any kind. Thank you.